underdressed para la ocasión, viéndolos a todos ustedes esta mañana aquí. Nada, como pueden imaginar, es un gusto para nosotros tenerlos de vuelta en el Encuentro de Economistas. Ha habido 40 encuentros a la fecha y ya teníamos una tradición de hacerlo aquí en la UP desde el año 2014. Desafortunadamente la pandemia nos impuso una pausa, pero aquí estamos de nuevo 10 años después para retomar esa tradición. Yo espero que el encuentro está aquí en la UP y haya venido para quedarse, y lo seguimos haciendo así en los próximos años. Como pueden ver en sus folders, hay un programa de lujo para estos 2 días que vienen por delante. Hay más de 20 sesiones y casi 50 presentaciones. Los temas son súper variados, súper relevantes, tanto para la política económica como para la investigación. Veo con alegría y un poquito de sesgo personal algunas sesiones dedicadas a la pobreza y a la inferencia causal a nivel micro. Por ahí nos veremos con la gente interesada en esos temas. Obviamente todo esto es posible gracias al apoyo, al trabajo de muchas personas. Gracias especiales a Marco Vega y Diego Winkerlit, a Patricia Castillo, a Stephanie Sladgen, a Alice Caballero y a todo su equipo. También gracias a los keynote speakers que nos van a acompañar en esta plenaria y la de cierre, al comité científico, a los comentaristas y también gracias a ustedes por estar aquí esta mañana. Nada, que disfruten mucho esta conferencia y seguro nos vemos alrededor de estos días en las sesiones que vienen. Muchas gracias, están en su casa.
A continuación le doy la palabra a Eduardo Torregiosa, nuestro gerente general del Banco Central de Reserva del Perú.
Gracias, Carlos. Buenos días a todos. Es un gusto estar esta mañana aquí, en nuestra casa, y darles la bienvenida a nuestra 41ª sesión de Encuentro de Economistas. Se ha convertido posiblemente uno de los eventos más importantes del quehacer académico nacional. Ya desde hace una década y media, el programa tiene desde el año 83, si no me equivoco, pero en la última década y media se ha convertido en un punto de encuentro de académicos nacionales, internacionales y staff de investigación de múltiples entidades públicas, incluyendo el Banco Central de Reserva. Como dijo Juan Francisco, tenemos una agenda súper nutrida, muchísimos temas que vamos a tocar. Les comento algunos de ellos para que se recontrainteresen. Aquí nos están viendo por streaming. Vamos a hablar de actividad económica, inclusión financiera, política monetaria, crecimiento y desarrollo, economía regional, empleo, indicadores líderes, pobreza, riesgos e incertidumbre, inflación, entre otros. Vamos a iniciar la sesión plenaria con la ponencia de John Frost del BIS sobre el futuro del sistema monetario y vamos a cerrar el día de mañana con una ponencia de nuestro economista jefe Adrián Armas con reflexiones sobre el dinero digital de bancos centrales. Va a ser una sesión que necesitamos hacer un alto en el camino, dedicarnos a pensar, a reflexionar, a compartir conocimientos, un entorno movido, siempre sofisticado, pero es un privilegio tener la ocasión de sentarnos a intercambiar opiniones de forma sosegada, de forma reflexiva y por supuesto, altamente sofisticada en términos técnicos. Mi agradecimiento también, como lo ha dicho Juan Francisco, a los organizadores del evento, al equipo del Banco Central de Reserva, a Carlos Montoro y a todos quienes han estado involucrados, y por supuesto también a la Universidad del Pacífico, por una vez más acogernos en esta, su casa. Muchas gracias.
Bueno, tenemos todo listo para la siguiente sesión. Voy a cambiar a inglés para presentar a John Frost. Good morning. Welcome to the opening plenary of the 41st meeting of economists of the Central Reserve Bank of Peru. It is a pleasure to introduce John Frost, who leads the Economics for the Americas team in the BIS Americas office in Mexico City. The BIS is the Bank for International Settlements, also known as the Bank of the Central Banks. It's an international organization based in Basel, Switzerland, that provides central banks and financial supervisory authorities with a forum for dialogue and broad international cooperation. John is an expert on fintech, big tech in finance, central bank digital currencies, stable coins, capital flows, and technology and inequality. Previously, John worked in the BIS Innovation and the Digital Economic Unit, and prior to that, to the Financial Stability Board, the Netherlands Bank, the VU University of Amsterdam, and in the private sector in Germany. John holds a PhD in economics from the University of Groningen. In recent years, we have seen how technological and digital innovation is transforming payment methods, making them more efficient and accessible to the majority of the population. Likewise, we have seen the emergence of various digital assets, such as crypto assets and stable coins, and how central banks are embarking on the adoption in the interconnection of retail payments, something that we have been doing here at the Central Reserve Bank of Peru. As well, central banks are working in the possible adoption of central bank digital currencies, also known as CBDCs. In this sense, John is going to present us with a vision of what the monetary system could be in the near future with the adoption of these new technologies, and how this can help to sustainably reduce transaction costs. Also, as also happened previously in other past episodes, as John will show us. Well, if we are ready, we can have the connection with John. Thank you, John. Welcome. You have the floor.
Thank you very much, Carlos. I appreciate the kind introduction. And first of all, it's an honor to speak here at the BCRP Research Conference. I see a really excellent lineup of papers, and I'm sure that it will be a really good event. I would have preferred to join you in person in Lima, but unfortunately the travel schedule wouldn't allow for that. So I hope that I'll have a chance to join you there in person on another occasion soon. So, as Carlos mentioned, I'm here on behalf of the BIS, which is an international organization that belongs to 63 central banks around the world, including the Central Reserve Bank of Peru. I'm based here in Mexico City at the BIS Americas office, and I head the economics for the Americas team, which has 13 economists, analysts, and advisors doing policy-oriented research on issues of relevance to central banks in the Americas. I'm very glad that my colleagues Jose Alrazio and Carlos Madeira will also be joining you today and tomorrow to present research from their side. I'm going to start sharing the screen for my own remarks. One moment. I will just check that the slides are visible. Carlos, are you able to see the slides?
Yes. Oh, no, not anymore.
Okay, I'm going to switch one more time. Just a moment. Here we are. This should work now. I'll check one more time.
Now it's okay.
Very good. Okay, thank you, Carlos. Very good. So what I'll be talking about today, as mentioned, is the future of the monetary system. And this is drawing on both research at the BIS and our flagship annual economic report, which came out in June of this year. The annual economic report had a chapter 3, which has a blueprint for the future monetary system. And this includes the idea of the unified ledger. So I'd like to thank also at the outset my colleagues, including Leonardo Gambaporta and the Innovation and the Digital Economy team for input on this presentation. So let's start at the top with why the monetary system matters. So as people generally know, the monetary system consists of two parts. There's money on the one hand and payment systems on the other. And the monetary system is part of a broader financial system that consists of the financial intermediaries, markets, and infrastructures that support the activities of households, businesses, and the real economy. It's no exaggeration to say that the monetary system is a critical foundation of the economy, and that economies cannot function without sound money and payments. Now, recently there's been a lot of activity in money and payments. The digital revolution has brought many new ideas, many new proposals, both for monetary unit of account and how payments are conducted. And I'll talk just a bit about some of the more familiar ones. But I'd like to start with something that's a little bit broader and that is very much in line with the annual economic report chapter from this year. So at a very high level, throughout history, innovations in money and forms of payment have coincided with new types of economic activity. So as economies have advanced around the world, we've seen notable changes in the monetary system. One important innovation in past centuries was to record money as ledger entries overseen by trusted intermediaries. So this could include commercial banks, early deposit banks in Europe, for instance, and other intermediaries as time has gone on. The growth in trade and commerce in the last 500 years is hard to imagine without these financial innovations that made them possible. These ledgers, or paper ledgers for hundreds of years, they really were books where entries were recorded, often with double entry accounting. But over time, we saw an increasing dematerialization and the use of electronic record keeping. These digital counterparts, digitalization and dematerialization of money have brought profound changes on society at large. They've brought a number of efficiency gains. And again, we can simply think to our daily life and the instruments of payments that we use these days in our transactions to reflect on the many benefits that this digitalization and dematerialization of money have brought. So a big question, if we look at this kind of very high level over a very long time span, is what would be the next step in the evolution of the monetary and financial system? What comes next? And this year in the annual economic report chapter, we make the case that the next step in the evolution of money is tokenization. So tokenization could be the next big development, unlocking new types of economic arrangements. Now, an important question is, what is tokenization? What is meant by this? And tokenization is more than just a digital representation of money and assets. It's the creation of a programmable platform that allows the integration of several elements. Specifically, tokens integrate the records of an asset that are normally found in a traditional database with the rules and logic governing the transfer of that asset. So it's bringing together these separate functions that used to be performed individually into one programmable platform. By bringing these together, tokenization introduces two important capabilities. First, it enables the contingent performance of actions through so-called smart contracts. Smart contracts are self-executing protocols that allow things to be automated, financial transactions to be made conditional on certain conditions being met. A second important capability is composability, which means multiple actions can be bundled together into a single package, and these actions can then be executed jointly. So to understand how tokenization could improve the monetary system, we can start by discussing tokenized forms of money. And indeed, central banks form the core of the traditional two-tiered public-private system. So the implication for tokenization is straightforward. We need a strong foundation, we need central bank money to remain at the core of the system. And what's needed specifically is a tokenized settlement asset that could take the form, for instance, of a wholesale central bank digital currency. In this way, the system is underpinned by the foundation of trust in money that only central banks can provide. We can see here central bank money, or M0, continues to form the foundation, or if you will, the trunk of the tree in this new ecosystem. Now, beyond this, building on this trust, the question is what type of private tokenized money is best? Here we need a role for the private sector payment service providers, or PSPs. And And currently, there are two candidates for the type of money that private PSPs could issue and could make available in this system. So the two main candidates are asset-backed stablecoins and tokenized deposits. And let me just talk about each of those. So stablecoins represent a transferable claim on an issuer. This is akin to a digital bearer instrument. In past centuries, we had paper bearer instruments, for instance, bearer bonds or banknotes, privately issued banknotes. And the bearer instrument it belongs to whoever bears it, whoever holds it. So a stablecoin is essentially a digital bearer instrument. When you open your electronic money wallet on your phone, what you have is a list of your money balances with the name of the issuer next to the amount. So it's kind of like the private banknotes that we saw in past centuries. One example, in my home country, in the United States, there was the so-called wildcat banking era in the mid-19th century, where a number of private banks each issued their own private banknotes, and those circulated freely. And the value of those banknotes corresponded to the trust in the institution that issued them. Likewise, in the digital age, when someone pays you with a stablecoin, for instance, Tether or other examples, you end up with a claim on the issuer of that specific stablecoin. And the value of that stablecoin depends on the trust in that issuer. So if trust in Tether, for instance, were to erode, it may be that instrument becomes less valuable. So you have these different stablecoins that are each circulating and competing with one another, but the values, as we've seen in practice, can vary. And because there's no single money, there's no guarantee that all of these forms of stablecoin money will always trade at par. In other words, the singleness of money, which means the ability to substitute between different forms of money, each at par, and to trust that each of them will always have the same value, is not guaranteed. There are two further important shortcomings of stablecoins. First, because they need to be fully backed by safe assets, stablecoins tie up liquidity. So many stablecoins, for instance, use US treasuries or a different safe asset as the asset backing, but that means taking these assets out of the system and tying them up for the use of the stablecoin issuer. And the second issue is that know your customer practices can be difficult. And we see this again in practice, that a number of the large stablecoins do have some issues around integrity and know your customer. So in this example, we have a customer Hiro, and he's been checked, KYC'd, and then can use his stablecoin. But Bob and Maria, who are here shown on the right, that received the stablecoin from Hiro may not have been KYC'd. And so in practice, we see a lot of issues where it can be very difficult for customers to know when interacting with one another who's actually been KYC'd, who's gone through these formal processes, and who hasn't. And this can lead to some serious issues in accepting funds from a stablecoin and ensuring that they really are clean. So let's move now to tokenized deposits, which were the other competitor for this role of private money in this new system. In contrast to stablecoins, tokenized deposits offer a different approach. This approach closely resembles the way the current system operates. Think about a payment in tokenized deposits between customers of two different banks. In this case now, instead of Hiro, we have Sven and Maria. Each bank holds wholesale CBDCs issued by the central bank. Now, if Sven pays Maria, his holdings of tokenized deposits at his bank are reduced, and those at Maria's bank are increased. But importantly, Maria now has a claim on her own bank, which she trusts, and not on Sven's bank. In the background, the payment is settled between transferring CBDCs between the two banks. So at the end of the payment, Maria has a higher deposit holding at her own bank and has nothing to do with Sven's bank. And this is important because KYC rules are satisfied as well. This helps to uphold the integrity of the monetary system. Most importantly, since the value transfer is done using central bank money, the payment goes through exactly at par. In many ways, this arrangement is very similar to the current two-tier system. Commercial banks provide today the majority of private money for retail use in most monetary systems around the world, The central bank, in turn, makes sure that the system functions smoothly and efficiently. And of course, one can do more than just tokenize money. A step further is to tokenize claims on real and financial assets. So for instance, if Sven and Maria aren't just making payments to one another, but perhaps buying and selling securities or real estate or other assets, those too can be represented by tokens in the same system. The payments can happen using tokenized deposits or tokenized electronic money, e-money. In the background, they can be settled in wholesale central bank digital currencies. And this can bring a number of efficiencies and allow for much more efficient, frictionless transfer of assets between these customers. In this case, we're talking about hypothetical retail customers, but of course, this can also be very important for companies, financial institutions, etc. So let me try to explain how we can effectively integrate these tokenized assets into a common platform. The fundamental goal here is to bring together CBDCs, tokenized deposits, and other tokenized assets into a shared programmable platform or a unified ledger. And so this draws on a number of initiatives that are taking place elsewhere, for instance, in the crypto universe. But we know from those initiatives, these generally are, suffer from structural flaws and can't be at the center of the future monetary system. They also tend to be taking place in silos, so they're not integrated. By contrast, the tokenized deposits and unified ledger proposals that we're discussing will take place in an integrated system with central bank money at its core. Central bank money resides in the same venue as other tokenized claims, so this gives a firm foundation to the functionalities flowing from tokenization. In other words, knitting together these different tokenization efforts, the Annual Economic Report chapter introduces a new type of financial market infrastructure called a unified ledger. That ledger would bring together wholesale CBDCs, tokenized deposits, and other tokenized claims on real and financial assets. Importantly, the concept of the unified ledger can be either broad or narrow. Initial instances of the unified ledger, for instance, could be application specific. For example, we may have one ledger aiming at improving securities settlement, and a different ledger could facilitate trade finance and supply chains. Yet each of these could be integrated, for instance, using application programming interfaces or APIs. So each ledger would bring together the intermediaries and assets required for that application. Those intermediaries would also have to be involved in the governance arrangements. By using new technologies, including APIs, they could have secure data transfer between these different environments, and this could allow for large efficiency gains. This could thus complement existing financial market infrastructures, such as real-time gross settlement systems, central securities depositories, securities settlement systems, central counterparties, and trade repositories. But by bringing each of these together, allowing for more efficient integration, it can achieve new efficiencies and gradually change how financial transactions are conducted and settled. So the unified ledger consists of a number of specific elements that I'll just briefly sketch. Specifically, it requires a sound monetary unit of account. Again, we're considering central bank digital currency, for instance, a wholesale CBDC, as the central bank money that resides at the core of this system. Second, there would be a new type of tokenized money for daily use. So that could be tokenized deposits or tokenized electronic or e-money. Then there would be tokenized assets. Again, these can be securities, real estate, other types of assets that would be integrated in the same platform together with the central bank money and the privately issued money. Beyond this, there needs to be a data environment with reliable and verified information. In the decentralized finance world, very often we have oracles, which are sources of information and data that are used in blockchain applications. And there are very well-known problems with oracles about how to ensure that they report accurate information, how to ensure that that's trusted. So in this environment with the unified ledger, we have external information, but it comes from trusted sources. And we can thus be sure that the information is accurate, verified, and can be used in these various programmable applications.
So that's the data environment. And finally, we need an execution environment, which allows for the smooth execution of transactions and their settlement. That requires rules, standards, and governance, which are agreed at the outset and that allow for this efficient, in many cases, automated execution of transactions to take place. So together, these different elements allow for a number of benefits for efficiency, for financial inclusion, and for future-proofing the monetary system. This is very much the frontier of our thinking on what the future monetary system could look like. Necessarily, this is a very high-level vision. This gives you the key elements, and under each of them, there's a lot of work to be done. But a lot of work is also happening in this area, both on the research front, but also experimentation, for instance, through the BIS Innovation Hub. And so we hope over time to have more to show for this and to be able to consider how these applications can be achieved in practice. So I've gone now to the frontier of the thinking on the future monetary system and what it could look like. But even a step back from that, there is a lot of potential in digitalization, and I think there's a lot happening through kind of existing, tried and true digital methods that already are having a profound impact on the monetary system. So in the last few years, we've seen a lot of progress in specific areas in the monetary system around the world. I think one of the most dramatic has been the increase in the percentage of adults with a transaction account in different regions. In a lot of countries, thanks to mobile money and new relatively simple digital applications, we've seen the proportion of adults with a transaction account increase quite a bit. And also in this region, so in the Americas, in Latin America and the Caribbean, we've seen particularly rapid progress. You can see between 2017 and 2021, for instance, that there was this jump in the proportion of adults with a transaction account. I know Peru is one of the countries where this has been happening and that digital finance has played an important role in this. We've also seen a boom in investment in financial technology or fintech. This comes from work that we've published in the BIS Quarterly Review in 2021. We looked at data sources on investment in fintech globally. And what's really notable is that in the last decade, now a bit more than a decade, we've seen fintech investment go from something that's largely concentrated in a few jurisdictions, for instance, the United States, the United Kingdom, the EU, and etc., to something that really is a global phenomenon. We've seen a big boom in investment in China, for instance. Also in Latin America and the Caribbean, we've seen larger investment volumes in fintech. And if you look at the concentration measures, so the Herfindahl-Hirschman Index, HHI, shown in black on the left, that's come down quite a bit. And so you have a much more vibrant, more global, less concentrated fintech sector. And if you look at where the investment has been happening, initially we saw a lot more emphasis on e-commerce and mobile commerce, to some extent on insurtech, on big data, AI, and machine learning. Over time, that's also become more diverse. We saw a big boom in investment in the cryptocurrency and blockchain space up until 2021. Now in 2022 and 2023, with the crypto winter, that's declined quite a bit. But we see this growing investment activity globally in different sectors that's changing how financial services are offered, and as said at the outset, also challenging some of our conceptions of money and payments. Now, just to dwell for a moment on credit, fintech and big tech credit activity have grown very rapidly. So these are new entrants that are scaling up fast. Fintech credit refers to platforms that are online platforms that are not operated by commercial banks, generally focused just on financial services. And big tech refers to large companies whose primary activity is digital services rather than financial services, who may also offer some financial products, including credit. And globally, big techs lent out nearly $700 billion in 2020. Fintech lent about $100 billion. The largest markets here were China, with big techs like Alibaba and Tencent, but also Japan, Korea, and the United States are quite sizable. And also in Latin America, in at least several countries, in Brazil, for instance, in Mexico and Argentina, we know that big techs are also lending, especially to small and medium-sized enterprises, for instance, to support e-commerce businesses. So this is what's been happening in credit, but I think that you see very similar trends in payments and insurance and other areas, and these have brought very important benefits. So where I showed the increase in the proportion of adults with a transaction account, again, a large part of that has come from these new entrants, these new fintechs, and in some cases also big techs that are offering payment services. But I think importantly, these gains have also happened to a greater extent in jurisdictions in which public policy, for instance, central bank policies, have been supporting digitalization. So very specifically, progress in digitalization has been most rapid when supported by new public infrastructures. And one example of such infrastructures are retail fast payment systems, FPS. In South America, I think many people are aware of Brazil's PIX instant payment system. PIX was launched in November 2020 during the COVID-19 pandemic. And just in its first year, it became adopted by about 60% of Brazilian adults. Now that figure is closer to 80%. Strikingly, about 50 million users made their first digital transaction ever with PIX in its first year. And that's shown here on the left. We can see the individuals and businesses that are active in PIX. You can see the PIX transaction value in the green bars. But as seen on the right, you see that PIX has also carved out a larger share in the rapidly growing digital payments market. So PIX is shown in green. It's surpassed debit and credit cards even in its first year, and that's continued to progress since then. But what's notable is that debit and credit card transactions have not declined, neither have prepaid card transactions. The only digital payment transaction method that's really fallen is bank transfers, the so-called TED transfers in Brazil. And so there has been an overall growth in the market. A lot of these, so instead of taking the place of other digital payment methods, PIX really has taken the place of cash transactions. So PIX has substituted for cash and led to greater digital payments overall in Brazil. That's also meant new clients for Brazilian banks, clients that initially want to make payments, but may also want in the future to make, to get access to credit, get access to insurance or wealth management products, etc. And we've seen from preliminary research on the impact of PIX on the Brazilian banking sector that actually bank revenues in Brazil are holding up very well. We do see a shift from payment revenues into non-payment revenues, but overall, Brazilian banks have actually benefited from this. And so we see dividends for the system as a whole, for financial inclusion, for efficiency, but also we see that the financial sector, after its initial resistance to the proposals, has actually done quite well too. So this is one example of a public digital infrastructure that can support more efficient payments. Again, I know that there's work going on in Peru, and there are also very good examples of public infrastructures and of private services offered on top. Let me go to one other area that has a lot of attention and that I've referred to, at least in passing already, which is central bank digital currencies. Central bank digital currencies, or CBDCs, can be seen as a further digital public infrastructure. Formally, they're defined as a form of digital money denominated in the national unit of account, which is a direct liability of the central bank. And there are two main types. Earlier, I was talking about wholesale CBDCs, which are accessible to financial institutions, for instance, for settling wholesale transactions, but also retail or general purpose CBDC are being explored in many jurisdictions. Retail CBDCs are directly accessible by households and businesses. If you will, they can be seen as a form of digital cash. Just like today, cash is a form of central bank money that's issued to the general public. It's M0. It can be used for daily transactions. Retail CBDC could be a new form of M0 directly accessible by households and businesses for daily transactions, but it would be available in digital form, for instance, through wallets provided by private payment service providers. And this too would be a means for people to transact directly in a safe asset issued by the central bank. And that could bring a number of benefits for financial inclusion, for efficiency, etc. And we've seen in this region of the world, in the Americas, there's been a lot of work on retail CBDCs and some of the live retail CBDCs in the world, for instance, the Sand Dollar in the Bahamas, Jamdex in Jamaica, or the Dcash in the Eastern Caribbean currency union. These are examples of live retail CBDCs that are actually being used in practice. And I know a number of central banks, including in Ecuador and in Uruguay, have also piloted retail CBDCs. And so I think it's safe to say our region of the world has really been pioneering in the work in this area. So again, to go global, work on both fast payment systems and CBDCs is advancing around the world. I talked about the example of the Bahamas, Jamaica, the Eastern Caribbean Central Bank. Elsewhere, Nigeria has a live retail CBDC. And in other countries, we can see that there's a fast payment system. This map distinguishes between countries that have a fast payment system or not, and then the stage of their work on central bank digital currency, specifically a retail CBDC. And you can see in the United States, for instance, there's now a fast payment system, FedNow, which is live. In parallel to that, there's ongoing research on a central bank digital currency, the digital dollar. The same applies for Mexico or for Brazil. In Brazil, there's the PIX payment system, which I already talked about, but there's also ongoing work on the digital real or DREX. And so very interestingly, in surveys that the BIS has conducted of central banks around the world, a large number of central banks really see a role for both a fast payment system and a CBDC. In many cases, they see them as serving different purposes. Some central banks say that they also see potential advantages in the redundancy offered by having two such systems that could serve specific use cases in both cases. We have other central banks that say if we have very advanced work on an FPS, we may not need a CBDC. And a couple of the Caribbean jurisdictions, for instance, saying they see the work on CBDCs as taking priority more than work on a fast payment system. But I think this is a very live debate, and it'll be interesting to share perspectives across central banks as to the potential of fast payment systems individually, of central bank digital currencies individually, and of the two systems, the two initiatives, and how they may complement or substitute for one another. Again, there's ongoing research with colleagues here at the BIS and at the World Bank, where we're looking into exactly this. We'll be reporting on the views of different central banks that we interviewed on these issues in a piece that will come out later this year. Now, allow me to conclude. The future monetary system must still be built on a solid monetary unit of account and sound payments, just as the existing monetary system is. So again, these two crucial elements, sound money, sound payments, need to play a role in the future as well. As I've discussed, tokenization and the unified ledger offer new types of economic arrangements that can form the next stage in the evolution of the monetary system. We see a lot of potential in tokenization and the different functions that it allows to increase efficiency, financial inclusion, and bring many benefits for the monetary system relative to today's arrangements. Still, even before these initiatives, there is substantial promise in proven infrastructures such as retail fast payment systems, and indeed central bank digital currencies, which in some cases are already live in jurisdictions around the world. As the pace of change in monetary systems quickens, we think that there's great value in international cooperation, again, through the fora that we convene, for instance, here in the Americas with the Consultative Council for the Americas, or with the Consultative Group on Innovation in the Digital Economy. We bring together different perspectives. We try to let central banks learn from one another's experience. We certainly learn a lot from hearing from the central banks as well. And we hope that in this way, different authorities can inform one another, inspire one another, and help one another to achieve benefits in line with the policy mandates of their respective institutions. So I will stop here, and I will be very happy to take questions. Thank you very much.
Well, thank you, John. Well, we have time for questions from the floor. There is a mic. if you want, you can have your question in English. Otherwise, I could also translate that in Spanish. No problem at all.
Very good.
Yes? To English, yes. Well, let me start. Sensión. Well, I would like to pose a question. Well, this is a case, a particular case that is good for international cooperation. And as you have shown in the maps, there are different degrees of progress across countries. And also, the BIS is doing some work on this issue. If you could comment a little bit on what are the main initiatives of the BIS and how this could help to move the frontier, the technological frontier, especially for emerging economies. There's a trend that usually we are adopters more than developers, but also you have shown the case of Brazil with PIX. It's a different case. It's as also in other countries in the region, in the Caribbean, that is more, we have seen more developing than adoption. You can comment, if you could comment a little bit on that.
Absolutely. Thanks, Carlos. It's a great question. So I think regarding the BIS work in this area, let me distinguish kind of three broad areas of work. The first is on our research. So we have economic research by our economists, in many cases with co-authors, from academia, from policy institutions and central banks. And the research is aimed at informing the
Policy dialogue. It's aimed to be policy-oriented research that is both academically rigorous, but also can help to gather insights on the potential of new initiatives, the design of new initiatives, and the impact when they're actually introduced in practice. And so we're doing quite a bit in the research area, and I think a lot of it is, drawing on the experience of individual countries, seeing what's worked, what hasn't, and then helping to draw lessons from that are of interest to other countries. We also have more theoretical research that's looking at, the potential theoretical implications of CBDCs, fast payment systems, and other initiatives, tokenization. We have more conceptual work. In some cases, we have work that, is more operational, that really looks at design and how systems can be designed to inform the thinking in that area. So research is the first broad area the BIS contributes. The second area is policy dialogue, the cooperative activities, central bank collaboration. So again, at the global level, the BIS convenes meetings of central bank governors, for instance, the All Governors meeting, which has had some discussion on digital innovation initiatives. Here in the Americas, we convene the Consultative Council for the Americas, which brings together the governors of the BIS shareholding central banks in North and South America. And then under that, there are a number of working groups, for instance, the Consultative Group on Innovation in the Digital Economy, or also the Consultative Group on Risk Management, which is working on a report currently on risk management implications of central bank digital currencies. So these groups bring together senior staff from different institutions. For instance, Milton Vega from BCRP is our member in the CGIDE. And these allow for dialogue between the central banks to better understand experiences and to share insights. And the third broad area is relatively new, and this is the work in the BIS Innovation Hub. The Innovation Hub was founded in 2019 as part of the BIS Innovation 2025 initiative. And the Innovation Hub has centers in different jurisdictions around the world. So there's a center in Toronto, for instance. There's a center in Singapore, in Hong Kong, in London, for the Eurosystem in Frankfurt and Paris. And so these centers each have projects that are focused very much on applying technology to current challenges in central banking. So it's much more hands-on, operational, proofs of concept that can lead to new insights about how technology works and its potential to be applied in different circumstances. So the work of the Innovation Hub, I think, is also very much supportive and very much complementary to the research and to the dialogue between central banks. Now, Carlos, you also asked a question about the role of emerging markets as either adopters or as developers. And what really strikes me in this area is that because many of these issues are very new, because we're talking about technologies that weren't even conceived, you very often have emerging markets really leading the way. So I think Brazil is a very good example with PIX. Brazil is really a pioneer there, but also the Caribbean countries that are working on central bank digital currencies. A lot is being learned from those experiences that's also relevant for advanced economies. So I think that in digital innovation, because it's relatively new, there is the potential for experimentation, there is the potential for emerging markets to come up with very important insights that are relevant for other countries around the world. And indeed, I think that a lot of the work that you're doing in Peru could also be of great relevance to other countries. And I know from the discussions that we've had and hearing from the presentations of my colleagues that there are already some really relevant insights that can also help other countries to improve their policies and to take initiatives that might help in their policy mandates.
Yes, we have a question here from Adrian Armas.
First of all, thank you, John, for the presentation. It's Adrian Armas from the Central Bank. I'm impressed about this idea of the future, that one single platform with all these advantage to having that. So my question is about what is the relationship between this improvement in the payment system with other financial services, such as the concept of open banking or open finance. That's one point. If you could please elaborate more about that. My second point is about cross-border transactions. For instance, it is very well known in developed economies that remittance has a high transaction cost. So how this development in the future would help to reduce transaction costs. And thank you again for your presentation.
Thank you very much. Those are excellent questions. Yes, the
unified ledger proposal is, I think, a fairly far-reaching proposal that has a number of different elements. And there are other initiatives. So open banking or open finance is one that you refer to. And the question is, how do these relate to one another? Should countries be considering both? Should they be considering them as alternatives? I would say that open banking and open finance are primarily a retail-focused initiative. So open banking involves giving customers control over their financial data, over financial transactions that they can use, for instance, third-party providers to access their financial information from a bank, for instance, to initiate payments through a different method than going through their bank. That can also lead to greater competition in the retail banking space. And so, that could bring a lot of benefits for retail users. Open finance is a related initiative. It goes even further. It's broader than just banking, and it can include open access to data from insurance companies, for instance, or from brokers. So it's essentially the same idea, allowing for greater control over data, payment or transaction initiation through other fora, and greater competition as a result of that, but not just for banking, but for financial services as a whole. I think that's a very promising initiative. There are a number of countries that are embarking on open banking and open finance. I would say that the unified ledger concept is related in many ways. In both cases, we're talking about using application programming interfaces to allow for much more efficient linking of data or secure exchange of data between different environments. But the unified ledger initiative is, it starts from a more wholesale side. It looks at the infrastructures underlying the monetary and financial system, starting with wholesale CBDC, and then looking at this concept of tokenized deposits. They would then start going more into the retail area. So I think both initiatives are very valuable. There may be countries that are interested in embarking on both, but I'd say that the open banking and open finance initiatives come more from the retail side, and the unified ledger starts more from the wholesale side. Where they converge may well be something that ends up having a large impact on individuals and financial institutions and companies. You also had a question about cross-border transactions. Very important. There is a G20 initiative on cross-border payments. A lot of the focus is exactly as you say on remittances, because this is a key pain point in the current system. We see that around the world, the cost of sending, a $200 transaction across borders, this can be 6-7%. In many cases, it's even higher than that for individual corridors. And that's a lot. If you think about, the amount of money that migrants send home and the amount that gets lost on fees, this is really notable. And improving the cost, the speed, access to digital remittances, this is something that is very much a key policy initiative. We do see a lot of potential in the systems that I was describing to make remittances more efficient. So there's work, for instance, on linking together central bank digital currencies through so-called multi-CBDC arrangements. And it's been shown in practice by projects by the BIS Innovation Hub that this could dramatically lower costs and increase the speed of remittances. So this could be very helpful. Actually, the technology side of this is less difficult. It's the regulatory side. It's getting countries to, adopt the same messaging standards, to accept one another's regulatory frameworks, or know your customer, etc. Those are the kind of key challenges, but there is potential there, and the technology can help a lot. So multi-CBDC arrangements are one proposal. Linking together fast payment systems, for instance, through Project Nexus, which is another BIS Innovation Hub project. That's another proposal that can help a lot. And so in jurisdictions that have fast payment systems, if there is this potential to directly link them, that could very much increase the speed of remittances and could reduce the cost. It could mean having a direct link rather than having to rely on the correspondent banking network. Again, there's a link with the unified ledger in that the unified ledger proposal brings together these different different applications that are then linked through application programming interfaces. It uses tokenization, which allows for direct payment versus payment, or atomic settlement, where everything is conducted in one transaction or not at all. And that can help to dramatically speed up financial transactions, to reduce manual intervention, and thus also to lower costs and increase efficiency. So that's being explored. I hope that there will be more empirical evidence over time to actually substantiate the claims, to really test the hypotheses about how this will affect remittances and other forms of cross-border transactions in the future. But it's very much top of mind for those working on it, and we hope that there will be greater progress in bringing together different systems across borders, bringing down the cost of remittances, allowing greater trade, also within our region, and that payments will play a very constructive role in facilitating this.
See if there's a one question here from Alan Ledesma from the Central Bank.
Hi, hello, John. Thank you very much for your presentation. I'm thinking about this question about cross-border transactions. In terms of a CBDC, for example, theoretically, there are many ways to design a CBDC, whether they can be retails, they can be wholesales, they may bear interest rates. Like the design is just enormous. You can just design the one for your central bank. How will that complicate cross-border transactions? I'm not so sure. Like, I guess it's something else we have to do to make these transactions faster or more efficient. I know you have any thought on that.
Very good question.
Thanks so much. So yes, certainly different central banks will take different choices regarding whether to launch a CBDC, whether it'll be retail or wholesale, whether they have a fast payment system, whether it's operated by the central bank or operated by private entities. So there are many different design choices there, and certainly one of the issues we've discussed is what happens if countries take very different decisions? What happens if one country has a retail CBDC, the next just has a fast payment system, the next has a wholesale CBDC? Is it possible to actually integrate those and for them to allow transactions between them? And I think that what we're seeing is that there could be possibilities there. It could be that even if countries have different design choices in their CBDCs or fast payment systems, even if one country doesn't have a CBDC, it might still be possible to allow transactions to take place across borders. Very important are the messaging standards. Those do have to be harmonized in order to allow for efficient cross-border transactions. Also important is that the central banks cooperate early on to make sure that some of the key features are compatible and interoperable across borders. And again, our colleagues in the Innovation Hub and in the Committee on Payments and Market Infrastructures, CPMI, have been thinking a lot about this, issues of interoperability. And I think that there are technical possibilities there. You can have unified systems that bring together, for instance, wholesale and retail CBDC, or even forms of commercial bank money in the same system. The unified ledger, again, hints at that you might have a system that brings together many different types of money in one place. And so theoretically and technically, these things are possible, but it takes a lot of work in practice, and it takes a lot of cooperation between the central banks to agree on basic design principles, to make sure that cross-border is considered from the outset, that systems are made interoperable with one another. And so I think that there's a lot of work going on that. Again, I hope that over time we'll have more to report. But I think that it's an issue that people are very aware of, and where there is good cooperation between central banks early on, I think that there are possibilities there to allow for cross-border transactions, to allow for greater efficiencies, even where central banks, each following their own domestic mandates, may have very different choices for the infrastructures they design within their own jurisdiction.
Thank you. We have also one question here. You could also introduce yourself. Yeah.
Hello, Yair Giraldo from Latin American Reserve Fund. Okay, the world is moving to much faster payment systems and for central bank digital currencies, but there is a special breakpoint, and it is when the Federal Reserve kick off the digital dollar. And my question is, what will happen when Federal Reserve kick off its digital currency? Because it's an important issue for Latin American countries and emerging economies where the dollarization levels are a special issue. So the other question related to this one is how can emerging countries protect local currencies and keep the independence in its monetary policy?
Absolutely, great question, and thanks so much.
So certainly the Federal Reserve, I think, is very aware of the special role the dollar plays in financial systems around the world. And I think Chair Powell is also on record saying, they are very aware of, the role of the dollar, and are very careful in thinking about, a digital version of the dollar for specifically this reason, that as the world's reserve currency, they have to be very careful about any changes in that it could have implications for other jurisdictions. So I think there are many open questions on a digital dollar. First of all, whether it would be retail, whether it would be accessible by individuals and businesses, or whether it would be wholesale. I think there's also open questions as to how non-residents would access the digital dollar if it were to be a retail version. And I think the Fed is doing a lot of research. They've come up with some really interesting public research, for instance, with Project Hamilton by the Federal Reserve Bank of Boston, with the MIT Digital Currency Initiative. And they've shown design choices for a hypothetical digital dollar. But it was made very clear that no decision has been made regarding the issuance of a digital dollar yet. This is very much research aimed to inform the policy debate and to bring to the surface certain design considerations that will have to be kept in mind. I think that there is a lot of ongoing work, and there will be more insights over time as to what direction the Fed is likely to go. But I think that for the time being, it doesn't seem like there are any radical changes directly around the corner. And I think that the Fed is very much aware that the design choices that it takes could have very large implications. So certainly in a number of countries in Latin America, the dollar is used very extensively. There are some countries that are entirely dollarized. There are others where a large level of dollarization is there in deposits and lending, etc. So there is this important question, how can countries defend monetary sovereignty? How can they, encourage the use of the local currency? And this might become even more pressing because, it's not just the dollar that's now competing with local currencies. It's also in many cases private crypto assets that are competing and in some cases also displacing the domestic currency in specific use cases. So I think that the best thing that countries can do, that central banks can do, is to increase the attractiveness of the domestic currency. I think countries in Latin America, for the most part, have done very well in independent monetary policy and keeping inflation low and stable. We've seen even during the recent global inflationary shock, countries in Latin America were central banks in Latin America acted very early, raised interest rates fast, and have done fairly well in bringing inflation closer back toward target. There's still more work to be done, and of course, that's an ongoing issue. But I think that preserving the purchasing power of the domestic currency, central banks have been, using their independent monetary policy very effectively to pursue that. The other way that local currency can be made more attractive is by making low-cost payments in that currency possible and attractive. And again, the initiatives like retail fast payment system or a central bank digital currency can help to make the domestic currency more attractive and to ensure that it can continue to compete against digital alternatives, against crypto assets, against potential other central bank digital currencies in the future. And I think overall, I would say at a global level, no central bank really wants to issue a CBDC that will then be widely used in a different jurisdiction and then make life harder for for a different central bank. I think central banks are very cognizant of that. They don't want to displace domestic currencies in other countries. And I think there are fora for central bank cooperation where, if those types of situations were to come up, central banks could find solutions to that. With crypto, things are less straightforward. I think that there are a number of crypto providers that do see a lot of potential for crypto to displace domestic currencies in especially emerging market and developing economies. And there, I think different methods are available. But again, the best is making the domestic currency attractive, ensuring its purchasing power with low and stable inflation, ensuring efficient means of payments in the domestic currency. And those together should help so that people will want to continue using the domestic currency, and that it'll continue increasing its share in deposits, in lending, etc., and really being the domestic currency for the economy as a whole.
Thank you. Let's see if we have another question from the public. No, more questions. Well, thank you. I think you have given us a lot of food for thought. New ideas, new things are coming, and the move is moving very fast in this dimension. The digitalization, the use of new technologies for financial transactions. And as this is moving very fast, probably in the very near future, probably I'm talking about in the next few years, 5, 10 years, the monetary system is going to be different as we have seen until now. And it's good to be prepared, it's good to be in the discussion, and it's also good to have formulas like this, as you mentioned, the BIS, where we can have cooperation with other central banks and to learn from other experiences and practices. Thanks again for joining us virtually. We really hope that we can see you here in the future, not late future, probably in the next few months. It will be good to have a visit, and well, we'll continue with the next sessions, and have a nice day.
Thank you very much. Thank you again for the invitation, and I wish everyone a very productive conference. Thank you.
Bueno,